metal. That headline again just crossing at 210. It's been a heavy day for news on exchanges. Let's pivot here and talk about the crypto exchange FTX. Alex, I think that broke while you were on air that FTX was filing for Chapter 11 bankruptcy.
I think we missed that
You're right. I'm thinking about
it was
the
like half
9
an
a.m.
hour, but
this
nonetheless,
day will not end.
It's still pretty interesting.
Yeah.
Filing for Chapter 11. David Weston spoke to Larry Summers for Wall Street Week earlier, and he said that it basically resembled more Enron. There was a lot of conversation about, is it MF Global? Is it perhaps the dot-com bubble? Is it a Lehman moment? And the Enron was very interesting because it was a very specific incident. It didn't take down the power utility sector. It didn't take down the commodity market. It took down Enron and a lot of people associated with it.
You know what's spooky?
Yeah.
The interim CEO at FTX, because Sam Bankman-Fried is stepping down as CEO. John J. Ray III has been appointed to replace him. And to this, spooky Enron connection, he is a turnaround and restructuring expert. He previously served senior roles in bankruptcy, including Enron's. It's very full circle.
Yeah. Well, I guess in this particular case, you definitely probably really need it. And it's become also, how do you recover the funds, I think is a big question to that as well. Hey, I just want to follow up on that breaking news that you mentioned. The LME is deciding against a ban on Russian metals. So this was actually an enormous deal because there was a huge worry that the LME was going to ban Russian metal, and that would have caused like complete chaos within the LME and in terms of suppliers and people who were trying to take metal out and then they couldn't. It would have been a super hot mess.
Super hot mess. I can quote you on that?
Totally. Now, the likes of Alcoa, so like U.S. aluminum guys here, really wanted that to happen because it would have helped the aluminum price go super, super high. But so now those stocks are down a bit.
There you go. Well, a lot to keep an eye on, including that cryptocurrency story with FTX. We're going to be talking about it all afternoon. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks holding near session highs. We begin with headlines from the Bloomberg Professional Service. The London Metal Exchange has decided against a ban on Russian metal. LME says it will proceed with the status quo on Russian metal. Estee Lauder is close to a deal to buy U.S. luxury brand Tom Ford, founded by the longtime creative director for Gucci. This according to the Financial Times. We've got Estee Lauder shares pushing higher. Shares of Estee Lauder up now by just about 3.6%. Stocks have gained a surer footing after a choppy morning session, extending a rally sparked by a slowdown in inflation. The S&P's up 31 points right now, again close to session highs, up by about 0.8%. The Dow lower by 52 points right now, down by about 0.2%. And the Nasdaq Composite Index building on yesterday's gains. Right now, Nasdaq higher by 1.8%. That is an advance right now of 193 points. No bond market trading today because of the Veterans Day holiday. Spot gold up 0.5%, up $9 the ounce now to $17.65. West Texas Intermediate crude oil WTI up 1.8%, 88.07 a barrel. So again, recapping a mixed Friday. What a week it has been. We have got the S&P up now by about 0.8%. Cannot ignore Bitcoin with all the headlines. Bitcoin right now down 5.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, I would never ignore Bitcoin, and we're certainly not going to do that right now because obviously the breaking news today is that crypto exchange FTX filing for Chapter 11 bankruptcy. This story has moved incredibly fast. Let's bring in crypto reporter for Bloomberg News, Olga Karif. She joins us over Zoom right now. Olga, I want to go back in time to last Friday. How shocking would it be if I told you that fast forward 1 week, FTX, the empire, it's in bankruptcy protection?
Completely shocking. Last week was very quiet overall. So people worried about low volatility in the markets and how are the exchanges gonna, make ends meet until, something happened. And people generally said, well, nothing is gonna happen now until the economy improves. So not much to expect in the next year or so. And then here we go.
Here we go. Olga, the latest headline here is that the FTX withdraws derivatives clearing plan from US CFTC. I mean, shocker. CoinDesk is also reporting that FTX US stopped processing withdrawals midday Friday. What do you think the headlines are going to be over the next 48 hours?
Well, I think everybody's waiting to see what Sam Bankman-Fried says either on Twitter or in upcoming sort of bankruptcy filings. It's going to be interesting to see the financials as well as maybe get some commentary on what happened, what went wrong. In a series of tweets earlier today, Sam promised sort of to describe exactly what happened. So I think a lot of people are waiting for that.
It is amazing, SBF just tweeting through it. I don't know.
I'm thinking, wouldn't someone tell him to be shut it down?
Yeah, I would log out. So rarely would I log out, but probably in this situation. But Olga, let's talk a little bit about the fallout here because we've heard a lot about contagion. I want to know where to look next. We've already seen BlockFi, for example, halting withdrawals, the shutdown of Alameda, of course, SBF's trading arm. Where else should we be looking?
So a lot of funds and companies kept their funds on FTX, so they will obviously be affected. A lot of companies already tweeted out or put out statements saying we don't have much exposure, but some do, and so we'll see the ripple effects of that in the coming days. Also, FTX and Alameda, another company that SBF owned, they had their tentacles and pretty much throughout crypto. They were investors in a lot of projects, and some of these projects kept their treasuries on FTX. So we'll see some ripple effects from that as well. So of course, Sam was a big supporter of projects like Solana and obviously the token is getting crushed, partially because of people are still trying to figure out what the impact on Solana might be.
Are there any other tokens out there that have the same kind of intricate relationship with its parent company or an exchange that could be in the same kind of spot where it was used as a loan or as collateral, etc.? Are there other worry spots like this?
So of course, FTT, the token connected to the FTX exchange, crashed and burned as a result of this. It's probably going to be in the center of investigations into sort of what happened here, why and where did the money from FTX go. So that token sort of plummeted over the last week. And there can be other tokens that are impacted, but honestly, FTX was such a huge presence in the entire ecosystem. I think it's probably easier to name, major tokens where FTX did not have much influence than the ones where it did.
Mm-hmm. Yeah, no, definitely. I mean, his empire was so far-reaching, and I mean, one of the places that it did reach was the Solana blockchain, and it's probably not surprising that after FTT, we've seen a lot of pain in the Solana token. What's the bull case left for the Solana token, the Solana blockchain? Because, I mean, I think Solana, I think Alameda, I think SBF.
Sure, that's a good question. So Solana was built for as a competitor for Ethereum, as a blockchain to handle financial transactions. And of course, it was handling some financial transactions for SBF's businesses. So I guess what we'll see in the coming weeks is just how much adoption has it had outside of SBF's empire. A lot of people say this is a good technology. It's a big ecosystem. It's bigger than SBF. And we'll see how it plays out in the coming days.
Yeah, exactly. I really think a lot of people probably wish that Bitcoin didn't trade over the weekend now at this point. Thank you so much, Olga Karif, joining us on FTX. That latest headline, Katie, that FTX withdraws derivatives clearing plan from US CFTC. I mean, yeah, I would think so. But nonetheless, it is now official that that is happening.
Probably would have been bigger news if they hadn't at this point.
Probably.
But, I mean, I'm sure we're going to get more and more headlines like that over the coming.
It's like a drip feed, right? Because if there is no regulation, then how do you sort of go after someone when there is no regulation?
It's a great question. I wish I had the answer. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Alex, can I be a little bit honest here?
Yes.
I almost forgot that the U.S. midterm elections were this week.
No, it was like 4 days ago.
It feels like a literal year ago. Luckily, we're going to have Bloomberg News White House reporter Jordan Fabian on to help us break it down. But first, let's go over to Charlie Pellet for some headlines. Hi, Charlie.
Well, hello there, and here's what's going on. We've got the Dow, the S&P, and NASDAQ all advancing. S&P, best level of the day right now. Right to the numbers. We'll give you the why in a moment here. With the S&P up right now by 1%, higher now by 40 points. We have got the Dow Jones Industrial Average up 37 right now, a gain of 0.1%. NASDAQ is up 220 points, higher now by 2%. Spot gold is up 0.7%, 17.67 the ounce, while West Texas Intermediate crude oil up 2.9%, 88.99 now for a barrel of WTI. Bitcoin down 5.8%. Right now, Bitcoin 16,772. FTX's Ledger X has withdrawn a controversial plan under consideration by U.S. regulators to cut the middleman out of Bitcoin and Ether futures trading. This, according to a person familiar with the matter. The Commodity Futures Trading Commission was weighing the proposal, which had drawn pushback from Wall Street giants, including CME Group and Intercontinental Exchange. Former Treasury Secretary Larry Summers is calling for an expansion in the number of forensic accountants, though not necessarily an increase in regulation in the wake of the meltdown in Sam Bankman-Fried's crypto empire. In an interview, an exclusive interview with Bloomberg's David Weston on Wall Street Week, he also said the market is expecting another rate increase at the December meeting, but not 75 basis points.
Well, I think the market's been expecting 50 for some time as the most likely case, and I don't see a reason to change from that expectation.
And you can hear the full interview with Larry Summers on Wall Street Week, Bloomberg Wall Street Week with David Weston, 6 p.m. Wall Street time right here on Bloomberg Radio. United Airlines has told pilots it will be moving forward with a planned 5% pay hike in December in a show of good faith, days after the aviators rejected a proposed contract. Airline shares, their trading mix right now, UAL up 2.1%, American up 0.7, Delta up 1.1%, Southwest down 0.9%, JetBlue up by 2.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thanks, Charlie Pellet. Really appreciate it. So as we were talking about, the midterm elections actually did happen on Tuesday. And one of the more interesting things that came out of it, in my opinion, is how Rupert Murdoch has turned against President Trump. And I feel like that sets the stage over the next 2 years and potentially into Tuesday when former President Trump is supposed to have an announcement at 9 p.m. So let's get more on this. Jordan Fabian is Bloomberg News White House reporter. He joins us now. So Jordan, I know this was like 2 days ago, but the Wall Street Journal editorial page, some of the headlines on the day after, the GOP's midterm failure, Trump is the Republican Party's biggest loser, and the New York Post, Trumpty Dumpty, talking about Donald Trump not being able to get it done. What did this signify in sort of the next 2 years?
Well, it signifies right now that elite, high-level Republican and conservative decision makers want to move on from Donald Trump. But guess what? They also didn't want Donald Trump to be the Republican Party's presidential nominee in 2016, and that happened anyway. And so there's going to be a struggle to sort of name the standard bearer for the party here moving toward 2024. But the big question is for people like Ron DeSantis and even Mike Pence, people who want to unseat Donald Trump, are they going to be able to do that? Are they going to be able to take him on? And that's going to be the big question facing those folks in the coming months and years here.
It's the big question, and it's impossible to tell. But what's the leading right now? What do your sources tell you on will they be able to take on that challenge, the likes of DeSantis, Mike Pence, for example?
So a number of donors and operatives are trying to coalesce around a single rival to Donald Trump. Right now, that's Ron DeSantis. So behind the scenes, they're trying to coalesce support, whereas in 2016, of course, you had a dozen Republicans running against him and the opposition was split. That's going to be difficult. I think, number one, there's a lot of other Republicans who want to become president. And, number two, will Ron DeSantis have the chops and the wherewithal, A, to run for president, and B, to take on Donald Trump effectively? We've seen his brand of politics really become popular in Florida. He won by a landslide. Is it going to have the same resonance on the national level? That's something he still has to prove.
Do you think that President Trump successfully announced his re-election campaign at 9 p.m. on Tuesday? I've been reading a lot about how some of people closest to him are trying to put it off until after the Georgia runoffs.
That's right. He's being urged not only by his own advisors, but by Republican Party politicians to put this off, or frankly not do it at all. It remains to be seen whether he'll listen. And he's kind of boxed himself in, given that he wanted to announce his presidency even before the midterms of that Ohio.
I mean, he kind of did,
on
but
Monday.
okay.
Yeah, exactly. He made an announcement about an announcement, sort of trying to compromise with the people who were telling him not to do it then. And so, now he's kind of boxed himself into making this announcement, or else, I think if he doesn't, it'll be seen as a sign of weakness. And if there's one thing Donald Trump hates, it's looking weak.
That's for sure. I feel like we learned that time and time again. But Jordan, going back all the way 3 days ago, ancient history at this point, something I'm still trying to work out is whether this was truly a good night for the Democrats, the midterm elections, whether they outperformed here, or was this a case of, the Republicans not quite getting to where they expected to be?
I think it's a little bit of both. You had Republicans, struggle with the Trump issue. You had them struggle with the abortion issue, and that being a salient issue for voters, and also candidate quality. A lot of these Senate races, you had Democrats, frankly, just nominate better candidates. So you have to credit the Democrats there and criticize the Republicans. But then again, look, I mean, Democrats did outperform expectations, certainly. This is the best midterm election for a first-term president since George W. Bush in 2002. But at the same time, President Biden is likely going to be facing a new political reality because Republicans are expected to take over the House. There's a slim chance that Democrats hold on to it, but it's likely that Republicans will control it. And so that means the next 2 years are going to look a lot different for him. Agenda's going to be on hold. He's going to be facing investigations, possible impeachment of some of his cabinet secretaries or even himself. So it's just going to be a much different challenge for President Biden as he looks and decides for himself whether he wants to run again in 2 years.
All right, Jordan, thanks a lot. Really appreciate it. Jordan Fabian joining us, Bloomberg News White House reporter. And I think, Katie, the other question is, can the Democrats not be too cocky about this? Because you heard President Biden say that he is considering a run. He'll announce it formally next year, but still, that leaves a lot up for grabs. And they don't want to go too far out over their skis. Much more on this. This is Bloomberg.
Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hi, Nancy.
Thanks, Katie. Nevada and Arizona are still waiting on key election results. Nevada's U.S. Senate race between Republican Adam Laxalt and Democratic incumbent Catherine Cortez Masto is very close, as well as the governor's race between incumbent Democrat Steve Sisolak and Republican Joe Lombardo. In Arizona, Democrat Katie Hobbs is leading that race for governor against Republican Kari Lake, with more votes to count. Samara Klar, a professor of political science at the University of Arizona, tells Bloomberg in the Senate race there, Democratic incumbent Mark Kelly appears to have the edge over Republican Blake Masters.
He is leading by about 200,000 votes or something like that. He's got a fairly sizable lead over Blake Masters. So it looks as though that race could be called, unless Maricopa County goes surprisingly more in favor of the Republicans than people are expecting.
Again, Professor Samara Klar. In the Georgia Senate race, a runoff is set for December 6th between Democrat Raphael Warnock and Republican Herschel Walker. Walker is back on the stump, urging supporters to back him in December.
He's thinking he's going to win. We need to prove him wrong and let him get out of that office. He don't deserve to be in that office representing Georgia.
Walker is on a bus tour of the state. Warnock yesterday said he needs voters to do what they've done before and turn out and vote. The Democratic Senatorial Campaign Committee is putting $7 million into field organizing in support of Warnock. With all these election results still coming in, Florida Senator Marco Rubio is calling for a delay in next week's party leadership elections. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right. Thank you so much, Nancy Lyons. We spent a lot of time talking about crypto today. Something that's similarly spiritual to crypto, I think, is Elon Musk. Somehow, we're 41 minutes into this program. We haven't talked about him yet, but it's interesting. We saw in his first address to employees, he said that bankruptcy is a possibility if the social media company is unable to start generating more cash. And obviously, Alex, bankruptcy is a scary word. Certainly employees never like to hear the new owner of the company say that, but Musk, he's used the B word quite a few times. He has a long history with it.
Yeah, I love this. So the article goes through in details like tweets that he's had, talking about Starlink, which is of course SpaceX, and talking about Tesla and how the B word was used like many, many times over the years. So it's like, how seriously do you take it? Or is it also just kind of like a fear tactic, right? Because he's really, I mean, he laid off a lot of people, then he had to call some back. But he also is really cracking down on remote working, et cetera. So it's sort of like, get your ducks in a row, guys, or else we go bankrupt. Like, is that the theory behind
like
that?
a threat almost. Like, hey, we better be in the office making money. Or
else. I don't know. Or maybe it's actually true.
Yeah, we'll see. I mean, he does have a long history with the word. If you think about how he runs things over at Tesla, in May, he sent an email to Tesla employees, again, elaborating on the need to return to the office. He said, the more senior you are, the more visible must be your presence. He goes on, and then he says, Tesla would have long ago gone bankrupt. That's why I lived in the factory so much. So there you go. Sounds a little fear tactic-y.
Yeah, although, it also reminds me in some ways of like old school Wall Street. Like all the top execs of the Wall Street firms during the pandemic, they never went home, they stayed.
Yeah.
And I was talking to one top executive over at one of the big investment banks this week, and he was basically saying it's really hard because a lot of the younger people or the people that they've hired don't want to do that. And it's basically the culture that they're then fighting against, and that gets really tricky.
Oh, yeah. I will say I spend so much time on TikTok. I feel steeped in Gen Z politics. They're never going back to the office. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service, another big tech company cutting jobs, this time Global Foundries. It is planning not only job cuts, but also a hiring freeze. Shares of Global Foundries, GFS on the ticker there, they're up now by about 4.7%. The Dow, the S&P, NASDAQ, all holding on to gains within the past 15 minutes or so. The Dow went from negative to positive, up now by 43 points. That is an advance of about 0.1%. S&P 500 index up now by 1%, higher by 41 points. Important because it is building on yesterday's 5.5% surge. The NASDAQ Composite Index right now up 228 points. NASDAQ up now by 2%. Spot gold up $11 the ounce, up 0.6%, $17.66 the ounce, while West Texas Intermediate crude oil up 2.9%, $88.97 a barrel. So stocks are gaining sure footing after a choppy morning session, extending yesterday's rally sparked by a slowdown in inflation. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. So it's time now for our Business Week segment. This is when we dive deep into one Business Week stories of the day. And this time we're talking about gaming has a hated CEO who's now crushing and crashing into the metaverse. I didn't know who this CEO was. I didn't know anything about him, but apparently his reputation is not so great. So joining us now to break this all down for us is Bloomberg News technology and venture capital reporter Priya Anand and Bloomberg Business Week editor Joel Weber. Joel, let's start. First of all, hey, it's been a while. I haven't talked to you in a bit.
Hello.
It's good to chat with you. First of all, talk me through the headline of the story and what was behind the article.
So the story is written by Austin Carr, Jason Schreier, and Priya, and this is a really interesting guy. You're right, not exactly a household name, except once you hear where he's been, you might be familiar with sort of some of his legacy. So we're talking about John Riccitiello, who is the CEO of a company called Unity. And Unity is a really interesting company because probably not a household name, but in the gaming world, they are known for basically creating a platform that allows a lot of very nimble games and advertising. But before he was there, he was at EA, where he was definitely not loved. But one of my most favorite anecdotes from the story was actually, he's like one of these executives that can go from industry to industry. He was actually at Sara Lee Bakery. The pound cake. He took it from 16 ounces to 12. No longer a pound. That's kind of
that's what we're looking
one of the
at
legacies that we ran across. But Priya, talk to us about what his legacy has been like in gaming and sort of what his vision for the metaverse is looking like, because that's really where we tried to center this narrative.
Yeah, so as we write in the story, the metaverse conjures everything and nothing these days. It's a hot new space. Mark Zuckerberg is very interested right naming his company Meta. And John Riccitiello is known for jumping into the next big shiny thing. I mean, and he's a marketing guy through and through. People we spoke with praised his marketing skills. When he was at Häagen-Dazs at one point, he recruited a director of magic to make their shops into unforgettable tasting events that celebrate the experience of being alive. So this is someone who really jumps into things when he's interested. And at Unity, he has been talking up the metaverse as well and all the applications in and outside of gaming that his company can help different sorts of clients with. We did find in reporting out this story that there were plenty of examples that he shared with our reporting team that later on when we went to the customers, they said they were exaggerated. They were like, we don't actually use Unity for these things. So that was a bit interesting in terms of the strategy there to share those kinds of examples with us. But Unity is best known as the company that you might not have heard of that put all those ads into the mobile games that you play that some people might consider a little bit spammy. So one question is, like, if we do get to this world where we're all in the metaverse, it does seem like
if Unity is a part of that future, we can probably say with at least some degree of likelihood that ads are going to be part of that world too. If you thought you couldn't have more ads in your world, just wait for this digital world to take over your life.
Oh, many would say that this whole metaverse ploy is just a cash grab. But if we think about Mark Zuckerberg going big on the metaverse, it isn't too far of a stretch to say that shareholders haven't loved that, if you could just look at the stock price for that. But how is it going over at Unity? What has the response been like from investors, from employees? Are they on board?
Well, for Unity, you know, they've had projects that have started. They've had projects that have stopped. The company's CEO addressed his staff in an internal memo before our story published saying, you know, projects start and stop. They don't always complete themselves. You know, this is something that's at its early stages. So it definitely is early days for the metaverse, and we don't quite know yet what is going to happen there. But the question this week is, you know, with all the layoffs at Meta, what's going to happen with other companies that are also operating in the metaverse space or trying to, right? I mean, heavy investments when we're already starting to see that many companies perhaps overhired, got too excited.
Okay, so there's the challenges of actually building the metaverse and what that looks like and what those applications could look like. I'd like to come back to that. But the other thing that was pretty juicy in the story was, you know, there's also what Riccitiello is like in real life. So what did you guys learn on that front, Priya?
Yeah, John Riccitiello is controversial for several reasons. One being that he is not known. He is known for sometimes really catching people in unexpected ways during meetings. And, you know, if you get his attention and you hold his attention, great. If you don't, you're going to hear about it in ways that some people can find unpleasant. You know, sometimes they're shouting, sometimes there's some really brash talk going on. And then notably, John held a meeting a couple years ago in his office where he shared with staff in the atrium of their office that he had been dating the head of HR at the company. And that made a number of employees we spoke with uncomfortable because, you know, who do you report any personnel issues to if the head of HR is dating the CEO? The company said that he had reported his relationship to the board, that it was above water. The head of HR, Elizabeth Brown, eventually left the company and they've since married. But it did strike a lot of folks as something unconventional and not great taste in some employees' mouths.
Okay, well, that's interesting, right? So, okay, back to the metaverse. You know, what could this look like? To give him, Priya, just a little bit of credit for like what, you know, this is the future, getting to the future, sometimes a little bumpy, but best case scenario, what does Unity potentially look like?
Best case scenario for them would be Unity is involved in creating these digital worlds already, right? And helping the creators monetize them. And in the best case world, they'll be involved in that in what John calls sort of like the 3D digital world, which is the metaverse, as we've been saying. And so, you know, they see themselves as, if this thing really takes off, they'll be front and center in helping to build those spaces and help people monetize them. And as we know, on the internet, ads are a huge portion of, you know, how people make money. And they see themselves as really capitalizing on that. Mm-hmm. At the same time, they're looking at, you know, applications and they've touted applications to our reporting team that aren't necessarily even related to things like games. For example, they said an architecture firm was using their help to design a stadium.
All right, guys, we got to leave it there. Thank you to Joel Weber and Priya Anand on one of gaming's most hated executives crashing the metaverse. You can find that in the latest issue of Bloomberg Business Week. And this is Bloomberg Business Week on Bloomberg Radio.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left until the end of the trading day. Romaine Bostic and Taylor Riggs, joined right now by our colleagues Alex Steele and Katie Greifeld, in for what appears to be a vacationing Carol Master once again, and Jim Stenevik. But in the meantime, we do welcome our audience across Bloomberg Television, radio, as well as on YouTube. And quick take for a week and a day that has been quite remarkable here. Most of the gains that we saw from yesterday now extending here into Friday towards the close, guys.
Yeah, a really big extension here, particularly for the NASDAQ. I have to wonder, guys, is it a FOMO thing, fear of missing out after that inflation number kind of rolled over a bit, or is it part China? If we have a semi-opening, is that really going to propel stocks higher? But there is that follow-through, and I gotta still wonder why.
Or is it another attempt at the Fed pivot trade, which has been tried and failed, and there we go. But it's interesting that you see such a strong rally in tech, and then you look over at Bitcoin. The two have been tied at the hip. Bitcoin is not higher right now, down 5.5% or so. We all know the story. FTX finally filing for Chapter 11 bankruptcy protection today, just sending shockwaves through the crypto industry.
Well, and along the same lines, too, if you take a look at the dollar, so you bring up the Fed pivot, or if we're going to see a pause or something, if you've seen the dollar peak and if you've seen yields peak, does that actually help that risk appetite? I feel like the Bloomberg Dollar Index has just really fallen like a stone. I mean, we're looking at maybe the 200-day moving average next.
Yeah, absolutely. I mean, we're talking about the worst week right now for the Bloomberg Dollar Spot Index, going back to March of 2020. And for the S&P 500, though, well, you're talking about a 5-day stretch that has added about 6% here to that index. Going to be setting up for it's going to be the best day since June. Pretty much a similar story for the NASDAQ indices, up about right now about 2%. The Russell 2000 up about 1.3%. And the Dow Jones Industrial Average, which had actually been sitting out of this rally, perked up a little bit, I think, Taylor, when you came onto the screen. Now up 0.1%.
Wish I could take credit. Unfortunately, I won't. But take a look underneath the surface. And we talked yesterday about tech outperforming the S&P 500 by the most since February. And that trend is continuing in a little bit of a similar tone. It's energy, it's discretionary, it's services, it's tech. The huge outperformers are still up 2-3% alone on the day, even after the monster rally that we had yesterday. Down to the bottom, it's utilities and healthcare. Bond markets are closed, so you're not quite getting a read on the sort of defensive nature of those stocks today.
Absolutely, and at least on a percentage basis, a lot of the names that are leading this rally do fall into that defensive mode here. As far as some of the ones to watch, keep an eye on AMD. Those shares up about 7% here on the day. I think Alex was just mentioning some of the optimism that came out of the idea that China is loosening some of those COVID-0 restrictions. You're seeing a lot of the Chinese ADRs rallying. JD.com up about 6% here on the day. Keep an eye on Dollar General and a lot of the consumer staples that had been riding a wave of defensive positioning. That is now flipped. Dollar General down about 1% on the day. And we're keeping an eye on the crypto sphere. Silvergate Capital, which got really caught up in that downdraft. Of course, a big crypto-centered bank, if you will, actually higher here on the day by about 3.5%.
I do this just in honor of Alex Steele. You mentioned the dollar, you mentioned the technicals, so we whip it up and let's do it. This is a great chart, and this isn't even a log chart. When you think about the magnitude of the decline, blowing through the 50, blowing through the 100-day, and Alex, to your point, it's a 200-day moving average at a 1259 that puts the BBDXY, sort of the next stop down right here at 1275. And I know that you were also reading that note of Steve Englander over at SocGen saying that 1350 was a key level. The minute you couldn't use that as a support and it was a huge resistance level, it really was a lot of downside risk here to that dollar.
Yeah, and that really raises the question, how much of it's momentum and how much of it's now going to build on itself. So earlier, Guy Johnson and I talked.
No.
What are those?
Are you still talking? Am I talking?
It's kind of weird. Don't worry, I do this to Carol.
I'm weird. It's true, I am. But
that's why she's not here today.
I'm just gonna wing it. Okay, I was talking about technicals. I was talking about the momentum trade, right? So we had John Kolovos on from Macro Risk Advisors earlier. He's a technical analyst, and I want to get his take because it's all well and great to talk about the fundamentals, but with this kind of price action, the technicals really matter. And here's what he had to say about the move in the S&P.
The internals is what really gets me interested here. Yesterday, 53% of the S&P 500 went above its 200-day moving average. So if you use that as a general proxy of what an uptrend is, most stocks are in an uptrend right now, even though the index itself is not. So oftentimes, internals lead the market higher.
Internals lead the market higher. There you go. So I don't know. Maybe things are improving from a technical standpoint, from an internal standpoint for the S&P 500. I would also say I know the bond market's closed today. Like Carol, they're already on vacation. It is Veterans Day, so the bond market is closed. But that huge drop that we saw in yields yesterday. I mean, if you're a tech bull, what more blessing do you need?
Well said. I think that we were also looking at TLT, LYG, HYG, LQD, as sort of a signal of the directionality
Have you seen what's going on with
of
XBT or XRP? What about TRON?
You're just trying to
I think we're going to make it through the whole album. Just somebody throw another log chart up so we can get this conversation
I love
back on
log
track.
charts.
Yeah, absolutely. I mean, look, Alex, I mean, you're the new one here. I mean, Katie's an old hat at this. So I mean, I am curious to get your, in all seriousness though, when you look at the volatility that we saw this week on a cross-asset basis, so not just in stocks, but of course the big moves that we saw in the treasury space, and obviously just a complete debacle in the crypto sphere. I mean, what does that tell you right now about the structural integrity of this market?
Honest answer, I have no idea, because I also feel like options activity that are so short dated is potentially distorting any signal that you're going to get from the markets. And when you have put options then being put on, you have retail sellers selling into the rally that we saw, and a lot of, like I said, options market selling on a day-to-day basis. How do you really know what the direction or the signal is?
To your point, I think a lot of people coming out of this huge week, a huge week in crypto, would say that that is going to be a sideshow to sort of the integrity, Romaine, to your point, of the equity markets that are still focused on CPI, that we didn't see massive contagion and ripple effects. But it was a really big week when you think about the CPI, the monster rally, and of course, crypto and sort of the ramifications of that.
And I asked you this question a little bit earlier on the television program, and you dodged it. So maybe Alex or Katie can pick it up here. And that is sort of, what's the next catalyst here? I mean, what are the markets looking for? I mean, do they get it from economic data? Do they get it from Fed speak? The earnings season is pretty much over. What's next?
I was kind of hoping we could have a little bit of a breather next week. Maybe we could lay off on the catalyst a little bit, but we do have retail sales. We do have PPI, so we have some Fed speak too.
Don't you have to do the Bloomberg quiz? Aren't you the person who does that?
You know, I don't. They tell me day of.
Counting.
That does it for now. We're going to be back together live on TV and radio and YouTube and Quick Take, name it, 4 p.m. for our Beyond the Bell coverage. We're going to be taking you through today's market close. And a reminder, Quick Take, it's our simulcasting on Bloomberg Business Week. Romaine, huge.
That is.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Alex, was that your first simulcast with BTV?
So I've done it from the TV side. This is my first one from the radio side.
How did you like it?
It's different.
It's different.
Well, I'm used to having like return when you're looking into a camera, so I don't know what anyone's doing.
Yeah.
It's you know.
No, I get it.
I don't like change.
It is interesting to approach it from both sides. I've also done it from both sides. You know, it's a little alarming from the radio side, but at least we have each other.
One must be flexible.
It's so true. Romaine was really funny, but to his point, we didn't even really talk about the XRPs, the XBTs. Those, of course, are the tickers.
Oh, wait, he wasn't making those tickers up?
Those are actually real tickers on the
excellent.
terminal about cryptocurrencies. So again, just to get in a check on Bitcoin, it's down 5.8%. It is below $17,000 a coin. Again, if we think last year what it was doing, it was around $69,000 a coin. Incredible all-time high. So it's come down a lot. But Matt Miller was sort of pressing us on radio earlier today. Why isn't it zero? Why isn't it 5,000, 10,000? I mean, $17,000, that's still a lot.
Yeah, you also have to wonder, too, that there's got to be a serious support level somewhere that the bulls are going to defend in a big way. I mean, clearly haven't taken out that level because you probably would have seen a lot of stops triggered. So I have to wonder where that actually is.
Where are the margin calls? When does the liquidation cascade sort of kick in? It's a great question. I mean, this market doesn't have much to go on. It doesn't have fundamentals other than technicals, so those sort of big psychological levels. And to your point, it doesn't look like we've hit them yet.
Well, also, I mean, like, Bitcoin's not going to disappear. So FTX certainly is, and other exchanges or other areas may be at risk, maybe not. But the actual underlying blockchain and Bitcoin, well, that's not going to go anywhere. That's going to stay. It's just a matter of where it blows up.
We have the blockchain. That's important to remember. Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hi, Nancy.
Thanks, Katie. President Biden is pushing other countries to follow the U.S. lead in transitioning to clean energy. He spoke today before the COP27 conference in Sharm el-Sheikh.
The president ticked off the measures his administration has enacted, including new regulations to reduce methane emissions from oil and gas wells.
My commitment to this issue has been unwavering. Today, finally, thanks to the actions we've taken, I can stand here as President of the United States of America and say with confidence, the United States of America will meet our emissions targets by 2030.
The president cited the goals set forth in the original Paris Climate Agreement and apologized for his predecessor's decision to withdraw from that agreement, which he reversed. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is now on his way to Cambodia for a meeting of Southeast Asian leaders. Then he'll travel to Indonesia for a Group of 20 summit. It is Veterans Day, and that means honoring those who served the country at the Tomb of the Unknown Soldier in Arlington National Cemetery. Vice President Kamala Harris thanked those who served.
You stood as one to protect our democracy and our freedom. And even when you returned home and took off your uniform, you continued to serve and to lead in communities across our country.
Harris told those gathered in Arlington, veterans make our country stronger. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, thank you so much, Nancy Lyons. And as we track sort of the long trail that this FTX bankruptcy filing is leaving in its wake, let's talk about Anthony Scaramucci, of course, of Skybridge Capital.
Okay.
The mooch. He was on CNBC earlier today. He said that Skybridge Capital is trying to repurchase the 30% stake of his company that Sam Bankman-Fried's FTX acquired just months ago, Alex. This is moving so quickly.
Yeah, and just FTX said it was acquiring a stake in Scaramucci's firm that manages about $2.2 billion and then invests in both hedge funds and digital assets. So FTX Ventures provided Skybridge with cash to fund some growth and new product launches and to purchase cryptocurrencies that then Skybridge would hold on its balance sheet. I don't know. That feels very complicated.
It is.
I don't know how he can argue for his money back when there's going to be, regular Joes and clients that are going to be out their cash also with that's frozen.
Yeah, it's going to be a long, long process. It's going to be interesting to see how all of that shakes out. But there is a little bit of interesting color here. So Scaramucci actually flew to the Bahamas in an attempt to help SBF. This is what he said. He said that the original idea was this is a rescue finance situation and we could somehow help. However, he said that upon arrival, it became clear that, quote, at least from some of the people that worked on the legal and the compliance team, that perhaps there was more going on than it being a rescue situation, end quote. So he left that afternoon and he said he was distressed.
Yeah, yes, he was distressed. Well, he had to take a markdown on some of the securities in general, too, because cryptocurrencies rolled over. He also had exposure to FTT, which is FTX's token, and obviously that has really not any value anymore. What is it trading at? Is it
that is such
Does
a
it
good
go
question.
to literally zero?
It's not on the terminal somehow.
So somehow, if it's not on the terminal, we literally don't know. We don't even know what day it is unless it's on the terminal. Let's be completely honest.
Friday. So
guess the terminal told us.
the terminal told me it was Friday. It's been a very long day, of course. The big news being that FTX exchange bankruptcy filing, a story that we're going to continue to track here on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Those gains are fading. The Dow back in the red right now. Dow Jones Industrial Average down 21 points. That is a drop of less than 0.1%. S&P 500 index, though, with just about 43 minutes to go ahead of the closing bell. S&P right now up 27 points, a gain of 0.7%. And the Dow Jones Industrial Average up 1.4%. And actually, the NASDAQ Composite Index, I should say, up 1.4%, building on yesterday's gains, up now by 161 points. This update brought to you by Anshin Accountants and Advisors, the right fit tax and accounting firm that you need to succeed. Visit us at anshin.com/VIP to learn more. That's anshin.com/VIP. Spot gold up $10 the ounce, a gain now of about 0.6%, $17.66 the ounce. West Texas Intermediate crude up 2.9%, $89 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Let's get back to crypto. It's my favorite topic. It's the story of the day. FTX filing for Chapter 11 bankruptcy. We're going to dive into that with Timothy Tully. He is Chief Executive Officer at Zelcore Technologies. That's a multi-asset ecosystem that helps investors navigate all major exchanges and blockchains. Timothy joins us on Zoom from Boston. And when we think about the events of this week, I've heard it described as a Lehman event, an Enron moment. I've heard some describe it as an extinction event. Timothy, how would you describe it?
Well, thanks for having me on. I think I would probably describe it as a lot of short-term pain, but long-term, it's going to get blockchain back to where it was supposed to be, right? Which is a really high level of transparency, and to eliminate a lot of this counterparty dealings that were behind, closed room arrangements. And this is yet another example of that happening. I think the other big issue as it relates to FTX and Alameda Research, they participated in somewhere in the neighborhood of 300 companies, invested in 300 companies, either directly or they held their treasuries. So there's going to be a lot of impact here, both in these projects. And the other thing is there's a lot of counterparty, the biggest counterparties to most of these exchanges are other exchanges. So wouldn't surprise me next week to see another shoe to drop.
What would that shoe look like? Like, how do we know where the contagion actually might end? I mean, you might say, oh, well, people should have known the risks. But even Scaramucci was like, I feel duped. I feel betrayed.
Yeah, I wouldn't even want to speculate to guess where other exchanges, but I'll just give you an example. And by the way, I don't think either one of these exchanges are in trouble, Binance and Coinbase, but the biggest counterparties of each one of those is each other. So there's more transactions between each other than anybody else. So I would probably look at other places, other exchanges that have in the past had a lot of historical transactions, been big counterparties of FTX.
And so, I mean, one of the pushbacks that I've seen is that, this is what happens when you trust a centralized exchange. This is supposed to be decentralized finance. There's not supposed to be this level of interconnection, centrality. I mean, where do you fall on that? I don't know. Is this sort of revealing the promise of DeFi as a myth, or would you probably not go that far?
I would say I think this is probably the biggest misnomer. These centralized exchanges are traditional finance with a crypto mask. They're the same old thing where they have their own proprietary database where they track what they owe you and what they owe other parties. That's not what blockchain and DeFi was intended to be. It's that the blockchain technology is for the first time at scale to have the technology for you to have a one-on-one relationship directly to your assets. So I think this is very good for DeFi and crypto in the long run. Our company believes strongly in non-custodial and self-custody. And so this is another validation as to why I believe it's the right way to go, and that on-chain processing is the way to go. Most of the problems with FTX have been as a result of off-chain processing.
So at the end of the day, do these kind of exchanges become banks? Do they become brokerage firms? Like, is that what it's eventually going to have to in some ways look like?
I think it's going to be a hybrid environment where you have both DeFi, decentralized organizations, and some kind of centralized, but they're going to have to be regulated. The reality is, these centralized exchanges in crypto today are they're anomalous to the exchanges that we all think of today, Fidelity, Schwab, or whoever. It's just that the latter are very regulated by U.S. entities and international entities. That's not the case with crypto. So we're going to have to move towards more regulation, but DeFi and self-custody is going to be a big part of the future.
Let's talk about institutions and whether this really scares away sort of the TradFi players. Because again, if I go back to a year ago, I've found myself wanting to go back in time often this week, but let's go back to a year ago. We were close to a record high on Bitcoin. And if I think about the rallying cry of the bulls at that time, it was sort of this institutional embrace. We saw the launch of the first U.S. Bitcoin futures ETF that was supposed to usher in a whole class of investors who'd never really been able to get access to the crypto industry before. But I mean, after the events of the past week, the past few months, the summer, you think back to what we saw with 3 Hours Capital even. I mean, have you seen any indication that institutions are rattled here and they're not coming back?
I don't think so. If you look at what's happened in the last 90 days in particular, I think institutions have committed to being all in. I think we get hung up on these the volatility of this asset class in particular, but it's the technology that's going to win the day at the end of the day. And crypto, often refer to it as we're in the first inning of the first batter or the first inning of the game. You wouldn't pick finance as a use case if you had a choice, right? But we are, right? There's plenty of other use cases, and that's why I think traditional finance will move here. It's a much more economical solution for them, and they're showing that over the last 90 days in particular. Whether it's Fidelity offering direct trading to their customers, et cetera. I don't think they're going away. I think they're in it for the long haul.
Timothy, gotta leave it there. Timothy Tully, CEO of Zelcore, joining us there. And the collapse of FTX, what it means for the broader industry, and kind of when we get our feet out from under us of this crisis. This is Bloomberg.
you so much. Well,
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Alex, we've talked about crypto. We've talked about Elon Musk. We haven't talked about Mark Zuckerberg yet.
Or any of the CEOs that are just saying things like, I'm so sorry, you lost your job. Bye. I can't wait to hear more about this.
Yeah, it feels like there's a lot of them lately. We're going to get all into that. But first, let's get to the headlines with Charlie Pellet. Hi, Charlie.
Well, hello there. I thank you very much. You mentioned Zuckerberg and Meta Platform. Shares of Meta taking part in a tech rally today. Right now, they are up by just about 1.6%. Worth mentioning Amazon. That stunk up another 4.2% today. The Dow, the S&P, NASDAQ, we got 28 minutes to go ahead of the close here. They are all in the green right now, right to the numbers. We'll give you some color. Color is green. Right now we have got the S&P 500 index up by 1%, higher by 40 points. The Dow has been all over the map today, but right now up by 50 points. Gain there of about 0.1%. But the outperformer, NASDAQ, and the NASDAQ Composite Index up now by 1.9%. For NASDAQ, that is a gain of 211 points. NASDAQ 100 Index up now by 1.8%. We are seeing a broad-based rally here with the Russell 2000 up by 1%. Dow Transports, by the way, up by 2%. Spot gold up 0.6%, $17.66 the ounce right now. West Texas Intermediate crude now up 3.1%, $89.18 a barrel. Gargi Chowdhury is head of iShares investment strategy at BlackRock Financial Management. And this morning on Bloomberg Television, she cautioned against over-interpreting yesterday's CPI report.
This is just one print. One print, as we know, does not make a trend. It's a very good signal. It's necessary, but not sufficient. So I think we have to see at least 2 or 3 more prints that are along these same lines of, sort of 0.2 to 0.3, for us to really believe that the Fed is going to pause and obviously continue to see the market rally. And I don't think we're quite there yet.
Doximity shares are surging after its earnings beat expectations. Doximity up now by 31.4%. Boston-based Toast shares are also higher after the software platform provider for the restaurant industry boosted its revenue guidance for the full year. Toast Inc. up now by 2.6%. Walgreens Boots Alliance upgraded to buy at Deutsche Bank on greater confidence in its ability to transition into a healthcare services company. And we've got Walgreens Boots Alliance up by 8%. On the other side, heading lower, Blue Apron Holdings down now by 32%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so very much. So no doubt there's been a ton of layoffs, particularly focusing on the tech space. What is different this time is a lot of CEOs of the companies that are laying off people are saying things like, I'm sorry, my bad, I take full responsibility. I can't tell if it makes things worse or it makes things better. Let's get some more insight here with Jo Constance. She wrote a great article for us on the Bloomberg called The Work Shift Reporter. All right. Let's talk about the look behind it. You lay off 11,000 people and then you say you're sorry. Does that count?
I think it's probably better than not saying you're sorry. I mean,
wouldn't sorry be better? Like, here's my 0 paycheck for a couple years, and I'm sorry I had to lay you guys off.
Right. Yeah. I mean, I think that's the thing. It's cold comfort for a lot of people who are affected by this. And, for those folks, I think what matters a lot more in many cases is what the severance package looks like and what, support they're going to be getting moving forward in terms of finding their next role. So, I mean, I think there are a lot of other things at play, but I think, Zuckerberg and many of these other CEOs who are going through layoffs for the first time in many cases are paying close attention to what their messaging looks like.
And so can we talk about why they're saying sorry? I mean, there's sort of the human side, which hopefully they are sorry for laying off all those people. But you also write that, it could be a little bit of a recruitment strategy here.
Absolutely. So the folks I talked to Peter Capelli, who is at the Wharton School and heads up their HR department or HR studies. And, he told me part of it is definitely just the fact that the labor market is still very tight. and it's expected to rebound, before too long. And so the folks who are more forward-looking and who are savvy in this way are thinking about their employer brand. They don't want to ruin it, and they want to make sure that when the time comes to hire, they won't have that difficult of a time.
Now that's interesting, because there was also a theory that some companies wouldn't actually lay off workers because they were aware that the labor market was still so tight that if they needed to hire back, they'd be in a tough spot. But you're saying that for these tech companies, that's not the case, but they're just a little wary about how they're doing it this time?
Exactly. I think, the idea is at some point the market will turn around, but I think for tech stocks in particular, with rising interest rates, their investors are just looking at, they need profits now. They are not satisfied to be waiting for them to come at some far off point in the future. So for many companies, layoffs are a necessity. The headcount is the biggest, line item cost. So, but they just want to be very, very careful about how they're doing it so that it doesn't hurt them in the future.
Let's compare and contrast some company leaders here, because you have Mark Zuckerberg on one end of the spectrum saying that, I'm sorry, issuing a sort of mea culpa, and then you have Elon Musk, and I don't feel he's been quite as contrite.
Absolutely not. So he was a bit of the foil in this story, and we actually wrote another piece. I wrote one with my colleague Matt Boyle on the WorkShift team, and we looked at the parallels between Elon Musk and Jack Welch, who is famous for implementing mass layoffs as a business strategy. And so and both men really, contrition was not really their thing. They're pretty ruthless in the way they went about it. And so that's certainly the case. And there are a lot of people who think that it may come back to hurt Twitter in the future.
The reason why I'm just really struggling with this one this time is because of why they had to say sorry, to Katie's point. Like, it's not like all of a sudden there was a massive economic downturn and then everyone had to get laid off. It's that they also just made bad calls. Like, Mark Zuckerberg had spent too much money on Meta and just misread what investors wanted, for example. They just spent too much during the pandemic. They grew too fast, and now this is the blowback.
Right. I mean, I think that's true. And I think a lot of them are, taking accountability for that. I think in an earlier time, folks may not have taken accountability for that. Part of the perk of being CEO is not having to say sorry for a lot of people. But yeah, that's true. I think that's a big part of the narrative here.
All right. Great stuff. Great article. Definitely check it out and read it. Joe Constance joining us, worked shift reporter for Bloomberg News. I mean, to be fair, some of these places, though, the severance isn't bad. I was at Meta. Katie, I think, was looking at like 16 weeks and then 2 weeks for every year that you worked.
Oh, yeah.
I'm just saying, okay, that's different than all of a sudden you're being told on Friday that you can't come in on Monday and you no longer have availability to Slack or something.
Oh, yeah, no, I agree. At least the severance packages are generous. That helps maybe more than sorry does.
I'm thinking so. This is Bloomberg.
Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hi, Nancy.
Thanks, Katie. President Biden says the U.S. is on track to meet emissions targets by 2030, a goal that was laid out in the Paris Climate Agreement. He spoke today before the UN's COP27 conference, and he urged fellow leaders to double down on their climate commitments.
Let's reach out and take the future in our hands and make the world we wish to see, and that we know we need. A planet preserved for generations to come. An economy powered by clean, diversified, secure energy sources.
Biden says the U.S. has proven good climate policy is good economic policy. In Kherson, Ukrainians are celebrating. Russia's defense ministry says its troops have finished withdrawing from the western bank of the river that divides the Kherson region. Ukrainian President Volodymyr Zelensky says he can confirm their military special units have now entered the area. Veterans Day tributes are taking place across the U.S. today. Vice President Kamala Harris spoke at Arlington National Cemetery.
It is a profound privilege to thank and honor you today and every day.
Harris says to be a veteran is to have truly known the cost of freedom and to have borne it for us all. She says that's a debt that must be remembered. Big Ben will ring again beginning Sunday. London's famous clock was silent for the past 5 years while the Houses of Parliament went through renovations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right. Thank you so much, Nancy Lyons. Well, some more bad news, and that news is that U.S. consumers are seeing home buying conditions at their worst in a generation. That's as mortgage rates soar in response to the Fed's aggressive tightening cycle. Alex, again, I feel like that's bad news, but not too surprising.
No, it's just very sad for me. So my husband and I are trying to sell an apartment. I'm really good at picking the bottom in mortgage rates. I have a 2 3/4 30-year fix that I did.
Okay.
So I'm really good at doing that. I'm really bad at timing when to sell properties. So we're trying to offload something, and you know, you can always sell at any price, but it's like at what price do you have to do that? Because if you have to come in and renovate a property, for example, you have to factor that into how much you're going to have to maybe take out from the bank, and that sort of multiplies when you have 7% interest rates, and it just moved so fast.
Yeah, and I mean, hearing your story makes me glad that I'm renting. I feel a little stupid during the pandemic. I was like, God, I should buy. But in any case, now you fast forward to present day, about 4 in 5 consumers now describe buying conditions for homes as bad. That's a record in data going back to 1978. That is according to the University of Michigan's Consumer Sentiment Survey for November. The number of people who attribute the erosion in conditions to the higher interest rates at the highest level in 40 years.
Yeah, and that is interesting that you bring that up in terms of how it relates to Mish, because a lot of people wind up having their wealth stored in their house, and whether or not you're not going to sell it tomorrow, so does it really matter if your house price goes down or you couldn't sell it tomorrow? But the idea that you feel less wealthy, that does have an effect on how you wind up spending things and doing things. I mean, even in the UK, a ton of people's mortgages are now, or they're paying, their house is worth less than they're actually paying.
Exactly. It's that wealth effect that, I mean, it's how financial conditions tightening. I mean, this is the effect of Fed policy, higher interest rates.
Is your rent up or down or the same?
Oh, you'd have to ask my husband.
You're just like, you outsource it. You're like, I don't want to know. If I don't know, it doesn't exist. But I mean, maintenance, taxes, that's all going up. So I'm just wondering what was happening with rent.
Ask Joe. We'll have him call in. I don't know.
Okay, fair enough.
It's probably bad, but
It
in any
hurts.
case, this is Bloomberg Radio.
I don't know what, I can't do quick math, less than 15 minutes to the close of trading on an insanely wild week here in the United States. You have the S&P continuing its rally up by about a full 1 percentage point, the NASDAQ up 2 percentage points. We had the biggest rally in stocks yesterday that we've seen in 2 years, and we were able to build on that. You had University of Michigan Sentiment Index lower than estimated, inflation expectations a little bit higher, yet stocks were able to continue their rally. Also significant is you had the Bloomberg Dollar Index being able to drop again. Euro was stronger. Every G10 currency was stronger. The dollar really taking it on the chin. Is this a real reversal that we're finally seeing in the markets? Yes, I know we have crypto crashing. I know we have FTX, and that's one huge story. But the other is, are we finally going to see a Fed that's going to pare back those rate hikes? Or is the market in a bit of a fake out? So let's get more on this with Ryan Dietrich. He's Chief Market Strategist over at the Carson Group. Ryan, what do you think the market is pricing in right now with the kind of moves that we've seen over the last 48 hours?
Yeah, guys, first off, thanks for having me, and happy Veterans Day to everybody. So, listen, it's a historic move. I mean, here's something to think about, guys. Assuming the S&P is up 1% today, and I know we're close, there's going to be 4 straight Fridays. The S&P gained 1%. That's never happened in history, okay? We've got a lot of these never happened in history type of deals, just yesterday's 5% bounce. But here's what we think, right? Sure, short-term overbought after this rally, but we are optimistic. We made another major market low in October. 6 of the last 17 bear markets ended in October. This could be another one. And again, expectations are so low that any good news, like we saw yesterday, can continue to kind of push this beach ball higher.
Push this beach ball higher.
That's a great image.
I do like that. It's a bit more cheerful than some of the phrases we normally hear, like dead cat bounce. That's one of my least favorite. Bear market rally. A lot of animals. Nice to get a beach ball in there. But, I mean, talk to us about that. Is it one of those horrible phrases? Are we just pushing this beach ball higher temporarily? Are there still lows to be plumbed in the remainder of 2022?
No, we're optimistic that the low's been made, like I said. You know, you think about it, November, the month we're in now, is the best month the last 10 years, the best month since 1950. We know December historically strong. Those are just seasonality things. But let's take a second here and think about this. This is a midterm year. Midterm years tend to bottom late in the year. This one probably bottomed October 12th, in our opinion. 1 year off those lows, the S&P, going back to World War II, is higher 30% on average a year off the midterm year lows. So we're about 10% off the lows right now, ballpark. You know, I think it's just important for investors to know if we made a new low like we think we did, there could be some decent, real decent opportunities the rest of this year and into next year.
So here's what I'm trying to understand. No one is saying that the Fed is done with their hiking cycle, but we feel that if they go to 5% on the terminal rate, they just get there slower, that justifies the kind of move that we're seeing?
Yeah, that's a difficult question, but here's how we see it. 15 months ago, the Fed saw like 1 rate hike this year, all right? And we know what's happened. I'm not saying the Fed's perfect. I'm just saying the Fed is not perfect. They're not infallible. The Fed got awfully hawkish. The Fed isn't always right on these things. We think the market's priced in so much hawkishness, all these hikes. And yesterday's inflation data with used cars down 10%, the largest monthly drop ever in rents. These are things that are saying, listen, inflation is going to start likely coming back sooner or more than people think. That could give the Fed, leeway not to be so wildly aggressive. And again, maybe one more hike, this year, maybe 50 basis points, and then take a look around and realize, maybe things are okay. We gave the patient a lot of medicine, and inflation is indeed coming back down.
Okay, let's say things really are okay, Ryan, and inflation really has crested. The Fed maybe can take its foot off the pedal, maybe sooner rather than later. What is the biggest beneficiary of that when you look cross-asset?
Yeah, well, I mean, the easiest answer is stocks. I mean, really, you think about it, I mean, we had a 25% bear market, right? Let's look at 82 for a second. At 82, there was a 27% bear market in 20 months. As soon as inflation started to roll over back in late 82, within 3.5 months, the S&P made new highs. Now, we're not saying we're going to make new highs in 3.5 months this time, but we are saying, that things are really beaten down. And in the economy, we don't see a recession, right? The consumer is so strong. Earnings aren't great, but they're still saying not a recession. The market is priced in a recession in a lot of places. Housing's in a recession, but the rest of the economy is not in our view. And we think, again, the consumer's strong, says, hey, your average bear market without a recession recession, pulled back 24%. We just pulled back 25%. This didn't feel average at all, I'm aware. But if you look at history, maybe it was after a 120% rally, like we had off COVID lows and just catching our breath now. And again, those strong seasonals with the Fed is going to be more dovish with an economy better than expected. Maybe, stocks are still the place to be going out 12 months. That's our take.
So where? So what's overpriced a recession that you want to buy?
Yeah, well, we still don't like the large cap tech names. I've come on with you guys for a while saying that. Those are the biggest ones that are bouncing. We'd stick with some of those cyclicals, your industrials, right? Your healthcare, your energy names, some of the names that kind of brought you to the dance, so to speak, and also small caps. Small caps did not violate their June lows in October. There's some relative strength there. They're really cheap relative to large, and there's a lot more of them, right? There's a lot more stocks going up now than there were over the summer, which is good. So cyclical value and small caps are two areas we've liked and continue to like into next year.
Okay, that's what you like. What don't you like? What's ugly here?
Yeah, well, we stick with bonds. I mean, bonds might bounce a little bit here, but I mean, we still think this inflation that's here, rates a little higher, potentially could stick around a little longer. So we'd still say maybe avoid bonds here, and things like gold and some of those areas. We don't like some of those more pure defensive plays. We think really equities are the best.
So you don't want to pick up a little bit of yield on the 10-year for 10 years over 4%?
Pretty juicy.
I mean,
yeah. Well, no, you're right. And again, we're not saying outright avoid bonds. So just at the money that we run for our advisors here, at Carson Group, we're just still underweight fixed income relative to stocks. We think stocks do a lot better than 4% the next 10 years is the best way to put it.
Well, what about if we do get that Fed pause, maybe even a Fed pivot over the coming year? Then would you buy bonds? What would change your attitude?
Yeah, well, the way we have our bond structure right now, we've shortened up duration. Right now, maybe if we did get a Fed pivot, you could expand your duration a little bit. Maybe don't quite go to 20-year Treasuries, but 10-year Treasuries are kind of how we do it. But still, I think we just still think the opportunity lies in equities the next 12 months here.
What do you do with energy right now? It's had such an amazing run. It doesn't seem to want to go anywhere anytime soon. What do you do?
Yeah, maybe it can finally catch its breath right after the huge rally that it's had. But I'll put it like this. We still like energy. Any pullbacks, we buy it. Here's what I like about it. It makes up about 5% of the S&P 500. It was over 10% of the S&P 500 back in 2008. This trend, only for 2 years now, maybe less than 2 years, energy's been going up relative to tech. You tend to get these trends that last years. And I know that sounds odd to a lot of people, but the truth is these trends can last. So again, energy, it's had a heck of a run. But we think as longer term, next couple of years, it could still be a group that could do quite well.
I gotta say, it's interesting to hear that you're bullish on energy when you marry that with your inflation view that maybe we have seen the crest, because usually I think of energy as an inflation hedge, but maybe that's too simplistic. Maybe I'm revealing myself here.
No, you're right. I mean, there's a little bit of that there. And you guys talked about the dollar a minute ago, right? I mean, we've all seen it, right? The dollar has had a huge pullback. If the dollar pulls back, what tends to benefit from those areas? Well, it is your more materials and your potential energy. And honestly, gold, like I said, we're not crazy about gold, but historically that could do a little better. But a weaker dollar could help material and energy for sure.
Talk to me a little bit about how you're understanding the next 2 months. I heard that you said November tends to be good, etc. How much of the price action that we're going to see over the next 8 weeks is going to be end-of-year book squaring? I mean, sort of rather than fundamental, we're just building on any momentum because people got to sell the stuff, buy the stuff, show their investors that they own the stuff.
Yeah. Well, it could be a good deal of that. That's a great point because, again, in middle of October, when the market was down 25%, nobody owned equities then, right? We saw the put-to-call ratio, something like 20-year highs of put-to-call ratios. You look at how people are positioned. Nobody was expecting an end-of-year rally. Now we're getting some of it, and there absolutely could be that chase kind of to the finish line. And you honestly kind of see that a lot of times. And then with the Fed that likely is pivoting with some better inflation data, all of it kind of adds up to potentially stocks being a good deal higher than they are right now by the time the New Year's ball drops.
Ryan, we have about a minute or so left. I cannot let you go without asking about crypto in some shape or form. I'm not going to ask for your Bitcoin price target, but when you think about the events of the past week, do you see any spillover effects into traditional markets?
Well, I'll tell you, we did 2 days ago, or I guess the election day, right? On Tuesday, we saw some of that. But I'll tell you what, You know, if you would have told me that stocks are having their best week since June with the disaster that we've seen with crypto this week, I don't know if I would have believed you. But that's what's happening, right? That's telling us the risk assets, specifically equities, are doing well, and they're shaking off this extreme negativity in crypto. And that's, I think, is one more positive sign for investors to think that the lows indeed like they're in for equities.
Real quick, what are you watching next week? What's going to be a catalyst here for you?
Oh, gee, it's kind of, we're heading into the end of earnings season, and, you know, I guess we're going to start thinking about eating some turkey. So well, hopefully we just catch our breath. Honestly, after this big rally, what we're going to see is how much of the rally we give back, right? We can just kind of hang tough and catch our breath. And historically, the latter half of November is when things are historically stronger. So let's just catch our breath next week, ready to eat some turkey, and hopefully the end of your rally will continue.
That sounds like a great plan. I'm going to take you up on that. That is Ryan Detrick. He is the Chief Market Strategy at the Carson Group. Great to catch up with you. Thank you so much for joining us. It's time for Beyond the Bell. It's our simulcast with Bloomberg Television. Here we go.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Taylor Riggs, we're counting you down to the closing bell, and we're here to help take us beyond the bell. It's our global simulcast. Pleased to welcome back to the program Alex Steele filling in today for Carol Master and Katie Greifeld in for Tim Stinovic, or is it the other way around?
Yeah, I'm not sure. We haven't figured that one out.
I'm blonde? Is that what that means?
No. Anyway, we do welcome our audiences across Bloomberg Television, radio, YouTube, as well as on Quick Take here.
We have a huge correction.
To parse the crucial moments of the day, Alex Steele, what was most crucial for you?
Most crucial moment? Oh my goodness, it feels so dramatic. Actually, for me, the most crucial moment was waking up this morning and seeing that China semi-opened up in certain capacity, and I feel like that really helped the indices build upon its rally a bit, to be honest.
I have a huge correction.
Yes, can you correct yourself, Taylor?
What's that?
She's misleading our viewers.
I know. So the best performer on the week is the NASDAQ, but the NASDAQ and the chart that I'm looking at, the Dow, are the same yellow color. So I got confused. Oh my gosh, it's the NASDAQ. I stand corrected.
It's the longest week in the world. So
there we go. I was gonna let it slide, Taylor. I would never correct you.
Oh, I wasn't gonna let it slide. So
I know that you were.
You might as well pile on.
No, you didn't. Romaine didn't ask me what stood out to me in this market.
Sure, go ahead, Tim.
Thank you. Okay, as Tim, I will say that what stood out to me was the volume. If you look at trading volume right now on the S&P 500, it's 17% above its 20-day average. So this huge bounce that we're seeing, huge, in context of we've seen some huge declines, there's some conviction behind it.
Yeah, a little bit of conviction behind it. We'll see sort of what the sentiment is when a lot of folks come back to work on Monday. Of course, we do know this is Veterans Day here in the U.S., so of course the bond market is closed, and a lot of folks, of course, taking the day off with schools and other official government offices closed as well. The Dow Jones Industrial Average is going to finish the day higher by roughly about 0.1%. And Taylor, on a weekly basis, that amounts to 4%. Okay. The S&P 500 higher by about 0.9% on the day and about 6% on the week. The NASDAQ Composite higher by 1.9% on the day and 8% here on the week. Let's take a look real quickly at the Russell 2000. It's a relative underperformer of the day, but still higher, guys, by about 0.8%.
Let's mark those veterans closing the New York Stock Exchange. Romaine, what a moment. Really sweet. We're grateful for their service.
Absolutely. Taylor, yeah, you said it here. I mean, we talk about here this day. We had that great moment of silence a little bit earlier, and I know a lot of us just sort of look at this day as just another day to have off. But you remember what happened back in 1918, right outside of Paris there, at the 11th hour, on the 11th day of the 11th month of the year, that Armistice Day that, of course, today we now honor for the folks, not just for the warfare, but more importantly for the peace that they brought to this world.
Well said, Romaine. Let's take a look and get back to the markets as well. And really what a day it was. This is a day, this isn't the week, but still sort of interesting underneath the surface. Take a look at some of the green on the screen. The outperformers: media, entertainment, energy, semiconductors, auto components, transportation. The cyclical nature of transportation, something we're going to dive into. That's sort of been the rally in the last few days, is, well, sort of a big mover here. You're up 2.7 to 5% 5% on the day. Let's take, Alex, quickly here at some of the worst performers on the day underneath the surface. It's utilities, it's insurance, it's pharma. Those are off about 1 to 2%. It really actually was healthcare and utilities that you really saw sort of the bigger losers on a day like today.
Let me just jump in with a couple of superlatives here, Alex. NASDAQ 100 up 9.4% over the last 2 days. That's the best two-day gain that we've seen going back to 2008. The S&P, Alex, having its best two-day gain since April of 2020.
Yeah, I mean, these are unbelievable stats. Let's dig a little deeper into some of the gainers here for the S&P. So overall, it's the S&P Energy Index that is definitely the biggest winner here. And I just put the overall index in it because you could literally throw a dart at an energy stock and it would be higher. In the individual names, though, and this is where I feel like my China theme rings true a little bit, the best performing stock in the S&P is Paramount, up by about 11%. That's the most in 6 months. Okay, that's not a China thing, but the other two are. So VF Corp and Wynn are also doing really well within the S&P. VF Corp gets a lot of revenue out of China. That's the clothing retailer. And then you have Wynn Resorts also performing really well. Any kind of reopening is going to be good for the likes of those gambling companies. So I wonder if there is some kind of underlying trend there, particularly if you look through the top performers, you're still looking at some of those retailers and some of the gambling guys.
I'm going to be honest, I have no trend in these decliners. I had to dig deep for them because it is very much an up market. Let's talk about Blue Apron, though. This is an interesting story. So shares fell to a fresh low. This is a meal kit delivery platform. I'm more of a HelloFresh gal.
Is it?
It is. It is. So Blue Apron, it said it may offer up to $30 million in new shares. That's bad news. You can see that reflected in the share price, down 32%. The idea there is that this is just going to further erode the value of existing shares, which are already down 80% year to date. Moving on, Duolingo. I did not know this was a publicly traded company, but in any case, we got some earnings news there. Adjusted EBITDA in the fourth quarter fell short of the average estimate. You look at what that did to shares, 13% lower on the day. And United Health at one point was down the most since 2020. No real fundamental news here, but we did see a big rotation out of the defensive sort of sectors. United Health obviously falls into that.
We do, at this time, as we always do, the bond markets. We know, of course, it was closed today in honor of that Veterans Day, but you actually have futures market. And I think it was interesting, the investment grade and the high yield ETFs showed some decent gains on the day. Those are the ETFs, so those certainly were still trading. And within the futures forward yield, you're still seeing yields rising just a little bit, but really nothing in comparison to some of the key moves that we had yesterday, really all on the back of that CPI print that brought us for the first time in a few weeks back below a 4 handle on some of the key levels. Overall, though, quiet day here as we're thinking about a cross asset signal and a reopening of that bond market on Monday. Alex, I'm kind of joking that it might have been nice for bond investors to have the day off, given the huge moves yesterday coming off of the back of the big data that was this week of lower than expected CPI.
Although if we do a read through to what the European bond market did, we might have seen some from selling there, and we might have seen higher yields because you're looking at that, say, like Italian yields of 20 basis points, say, on the day.
Interesting to see what the global picture does look like, Alex. I mean, we were talking a little bit earlier about that European Commission outlook there for GDP, basically showing that they are anticipating that at least that they could be on the precipice of recession next year, not quite there. And then, of course, I think China still remains sort of a mixed bag. Remember, we got some of their inflation data earlier this week, and it was deflationary. So now it's sort of a little bit of a different story there that I think investors have to assess.
It's going to be interesting, you know, as we commence through the next few months and years, if there's a break apart in sort of the monetary cycles here. Obviously, it feels like all the developed market central banks are moving in unison up to this point, but I don't know. It's if you look at what's expected out of the Fed, we saw some terminal rate pricing come down. You think what is expected out of the Bank of England. It is going to be interesting if we can remain in lockstep.
Well, I mean, we're going to hear from a lot of Fed members next week. I think Harker, Williams, and a few other of the usual suspects, Bullard, are all going to be speaking or scheduled to speak.
Well, we got some interesting ones today, too, Romaine. You think about Susan Collins saying there's a risk of over-tightening now.
I saw that, and it does make you wonder that with some of these voices that have been advocating for that, that appeared to show up in the last statement, some sort of concession to the idea that there are voices on that committee right now that think maybe that's what needs to happen.
But she also did say that they weren't done tightening yet, which feels very different than the situation where the BOE might be in on when they're dealing with a lot tighter monetary and fiscal policy at the end of the day.
It all comes down to economic data. I mention this every Friday. The Morgan Stanley economists put out a note for their favorite week ahead. PPI in that, of course, Tuesday, 8:30 a.m. But you're looking at some slowing growth. If you think that that's a leading indicator to some of the CPI numbers, 0.3%, a slight decline month over month, and a year-over-year number that drops, but you're still in a 5 handle. And that is the big question for this Fed is it's dropping, but we're still nowhere near 2%.
I'm going to be honest with you guys. I'm going to try to ignore PPI. Maybe the markets will as well. You think about the really top tier data releases we have left between now and the end of the year. We have another jobs report. We have CPI. Maybe we can just sweep PPI under the rug. I don't know.
Okay, so we know that on Tuesday, Katie's sleeping in and she'll be in late. I am, though, in all seriousness, though, Katie, I mean, are you keeping an eye? I mean, I know you follow the crypto sphere a lot here.
Oh, yeah.
And I know that it's not really linked to fundamentals and some of the other macro issues here. But what do you make sort of the sentiment that we're seeing on a day like today, now that we've gotten a little more clarity, if you will, as to just how much exposure some of the other crypto players have to FTX?
That's going to be, again, the drip feed that I'm really watching over the coming weeks. It is interesting. This is a conversation I was having with Matt Miller, what feels like a long time ago. Bitcoin is down on the day, for sure. It's a bad day for Bitcoin, but we're talking about 17,000. We're not talking about 10,000. We're not talking about 5,000. So there has been a big drawdown, but maybe not to the extent that you would think if I had given you the news that FTX has filed for bankruptcy protection.
Well, we know Sunday evenings are a lot more fun. The whole weekend is more fun now that we know that the crypto space remains open. Yeah. Sunday, that's something to watch.
All right, I'm going to say goodbye here to Tim and Carol. Great catching up with both of you once again, and that does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And just a reminder that from today on, Quick Take will be simulcasting Bloomberg Business Week. You definitely want to check that out, and we will be back with our friends there tomorrow on Monday, same time and the same place.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, Bloomberg Business Week. I'm Katie Greifel along with Alex Steele, but Alex, I think you're leaving me.
I think she blocked that one out. I am leaving you, but it's okay. You only have like 52 minutes.
Okay. I think I can do that.
You got this. You got a lot to get through. There's more crypto to talk about.
Oh, yeah. We are just swimming in stories to talk about. We're going to get to that all. Alex, really, thank you for sticking aside me for the past 2 hours. I don't know who let Tim and Carol off at the same time.
I think Carol got sick.
Yeah.
Maybe I'm Tim, though, here, because I have the short hair. So I think I'm Tim and you're Carol. I think that's how we should be thinking about this.
We should have spent more time on this. But in any case,
I agree with you on that.
It's been great having you. This is Bloomberg Radio. All right, let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington. Nancy, how are you?
I'm good, and I'll be here with you for the next hour. President Biden is on the second leg of a three-nation trip. He's heading to Cambodia now for a meeting of Southeast Asian leaders. He'll then travel to Indonesia for a Group of 20 summit meeting. He'll be meeting with Chinese President Xi Jinping on the sidelines of that gathering. Earlier today, Biden spoke at the UN's COP27 conference in Egypt, saying the U.S. is unwavering in its commitment to combat climate change.
The actions my administration is taking puts the United States on track to achieve our Paris Agreement goal of reducing emissions 50 to 52% below 2005 levels by 2005 levels by 2030.
And Biden urged other world leaders to follow suit. While Biden is touting U.S. climate policy to world leaders, he's suffered a setback at home. As Bloomberg's Amy Morris reports, it concerns the administration's student loan forgiveness plan.
A federal judge in Texas struck down the plan, calling it, quote, one of the largest exercises of legislative power without congressional authority in the history of the United States. The lawsuit by two Texans claimed their education debt was excluded from the program. The loan forgiveness plan is already on hold under an emergency stay in a separate lawsuit brought by 6 Republican-led states. The Justice Department says it will appeal the decision. In Washington, I'm Amy Morris, Bloomberg Radio.
Twitter has suspended its $8 subscription program to combat a growing problem of users impersonating major brands. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, thank you so much, Nancy Lyons. Well, the Bloomberg Business Week Weekend Show features an interview that Carol Massar did with Sony Pictures Entertainment Chairman and CEO Tony Vinciquerra from the Bloomberg Growth Summit. In this expert you're about to hear, Tony talks about the global challenges for the film and television industry.
There's going to be areas that are rougher than the others. When you look at the world, how do you see it?
Well, Spider-Man, which we released last December, almost a year ago, did almost $2 billion in box office without China. You know, in the past, they probably would have done between $400 and $500 million in China.
Right.
We don't have Russia anymore.
Right.
You know, Russia was our top 5 markets. So, you know, it's a challenge, but, you know, you have to go with what you have.
How do you think about those markets? Because I do think about the importance of content.
Yeah.
We think about it certainly as a news organization. I mean, there's a lot of stuff going on, a lot of it troubling. You know, what do you see as your role in terms of the narrative and the conversations that are going on in a world where we have some really tricky topics?
Well, we try not to get too much into politics. And, you know, in my past life, I was very involved in news coverage and TV stations and things. And I'm very happy not to be in that business right now. It's a difficult world.
It's a difficult. Well, what about, like, you talk about China, right? And you guys are not.
Well, mostly not.
Or mostly not.
We didn't have Venom. Our film Venom didn't get into China. Spider-Man didn't get into China. The first Venom did $275 million in box office in China, 0 the second time.
Well,
so, you know, it's not a market that we expect to do business in right now. It's roiled in geopolitical relations, obviously, and something that we're not going to have any impact on.
That was Sony Pictures Entertainment Chairman and CEO Tony Vinciquerra with Carol Massar. Of course, you can hear more from that interview on the Business Week Weekend Show tomorrow at 8 a.m. Wall Street time on Bloomberg Radio and on our podcast feed at Bloomberg.com. That's tomorrow, though. We have a great show, a great last hour coming up. We're going to talk to 2 CEOs in the next 47 minutes or so. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best week for the S&P 500 index since June. For the week, the S&P was up 5.9%. The Dow, by comparison, up 4.1%. NASDAQ this week up by 8.1%. Stocks advanced with the S&P closing near session highs. Biggest weekly gain again since June. Today, the S&P was up 36, up by 0.9%. The Dow up 32 points, up 0.1%. While the NASDAQ Composite Index advanced 209 points, up by 1.9%. So the S&P heads into the weekend at $39.92. Spot gold up $12 the ounce to $17.67, a gain of 0.7%. West Texas Intermediate crude today up 2.9%, $88.99 a barrel. Recapping a rally on Wall Street, stocks closed near session highs today with the S&P up 0.9. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Well, as we've mentioned on this program, it is Veterans Day, which is a great framing as we introduce our next guest, Dan Goldberger. He is the Chief Executive Officer of ElectroCore. It develops therapies that directly and non-invasively target nerve signal imbalances to restore normal neurological function, of course, important in the treatment of PTSD. Dan joins us on Zoom from Rockaway, New York. Dan, it's great to have you with us on this day, especially. Tell us a little bit about the different therapies that you offer and the work that you do with veterans.
Kate, greatly appreciate the opportunity, and thank you to all your listeners. It is Veterans Day, and we thank all of our veterans for their service on this somber day. ElectroCore exists to commercialize what we call a non-invasive vagus nerve stimulator. Most of our business comes from the VA hospital system, and we are FDA cleared to treat primary headache, migraine headache, and cluster headache, which has unfortunately a very high incidence in our veterans population and has a substantial comorbidity with concussion and with post-traumatic stress disorder, which again have a very high incidence in the veterans community. So we're very fortunate that the Veterans Administration has been an early adopter of our technology, and we're thrilled to be able to help our veterans in our own small way. You mentioned PTSD. In addition to headache, the FDA has granted us breakthrough designation to treat post-traumatic stress disorder, and we look forward to working with the agency to advance that effort as well.
Well, I'd love to hear a little bit more about your interactions with the FDA, because as your notes point out, GammaCore, it's the only FDA-cleared non-invasive treatment of this type, the vagus nerve stimulator. What was that process like?
Oh, it was long and arduous and based on a tremendous amount of good science and rigorous clinical studies. Hundreds of patients were involved in the pivotal study. At this point, more than 50,000 patients have been treated with our therapy. And, while, the bad news is that the FDA process is rigorous and takes a long time. The good news is that, look, the agency is watching out for consumers, and we end up with really outstanding therapies, best in the world, best in class therapies that are ultimately approved by the agency.
And so talk to us a little bit about what the actual treatment looks like, for people, for veterans who are coming in to get this treatment. Walk us through the steps here.
Yeah, absolutely. There's plenty of information on our website at gammacore.com. We make our flagship product is called the GammaCore Sapphire. It's a small handheld battery-powered personal use device. It has 2 electrodes. We train patients to find the vagus nerve, which travels in the same sheath as the carotid artery. It's a 2-minute dose of electrical energy. And I occasionally get headaches and migraine headaches. And for me, I can very quickly relieve the discomfort associated with the headache. We also have a prevention protocol where we recommend using it twice a day, so think morning and evening. And the pivotal data showed a statistically significant reduction in the number of headache days when patients were following that sort of twice a day prophylactic use. So it's very, very exciting. We've got a tremendous number of testimonials, growing number of testimonials around folks who use it regularly for treating cluster headache and migraine headache, predominantly in the Veterans Administration, and then more recently around the post-traumatic stress disorder and the clinical trials that we're doing there.
And Dan, when it comes to migraine specifically, I mean, I'm definitely guilty of this. The term can be used so flippantly. You know, I have a slight headache and it turns into a migraine as I exaggerate throughout the day. But I mean, when we think about migraines, when we think about cluster headaches, these are real quality of life issues. When you think about driving, operating machinery, like these have serious ramifications for the day-to-day activities that a person can do.
Absolutely. Cluster headaches especially are an incredibly debilitating form of disease. There are about 800,000 people in the United States who suffer from cluster headache. Migraine affects tens of millions of folks to varying degrees. While there are a lot of pharmaceutical options for migraine headache, there are also a variety of side effects associated with those pharmaceutical options. And so what we offer is an electronic solution. This is not a pharmaceutical. Can be used as a standalone therapy, but it can be used in addition to pharmaceutical therapy. And some of our patients, do that kind of combination therapy. So, I think we have a very, very exciting therapy to solve for exactly the situation that you described, where your ability to work, your ability to spend time with your family is impaired by a disruptive headache.
It's important work. It's an important reminder. On today of all days, of course, we're talking about Veterans Day. Dan Goldberger of ElectroCore. He is the Chief Executive Officer. Thank you so much for joining us on Bloomberg Business Week Radio. Joining us, of course, on Zoom from Rockaway, New York. Really appreciate it. Well, we have much more of the program coming up as we count you down till 5 p.m., about 35 minutes or so left. Much more coming up on Bloomberg Business Week Radio. I'm Katie Greifeld. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it's been a busy week. If I look past, the past several days, we've had midterm elections. We had U.S. CPI, the latest inflation report. We also had the bankruptcy of one of the biggest crypto exchanges out there. But you might have missed, actually, on Wednesday evening, there was a record-breaking art auction. We're talking $1.5 billion, 60 artworks. We're going to get all the details next. But first, let's get to Charlie Pellet for some headlines.
Thank you very much. Here's what's going on. Let me paint the picture. We've got the Dow, the S&P, NASDAQ all surging today. Stocks gained after a choppy morning session, extending a rally that was sparked by a slowdown in inflation. S&P 500 closed near session highs and the biggest weekly gain since June. Now, for the week, the S&P was up by 5.9%. This week, the Dow up 4.1%. NASDAQ this week up by just about 8.1%. So here's where we wrapped up the session. The S&P up 36 points today, up 0.9%. The Dow up 32, up 0.1. NASDAQ up 209, higher by 1.9%. And that was on top of yesterday's surge after the CPI report. Spot gold up 0.7, 17.67 the ounce. West Texas Intermediate crude up 2.9%, 88.96 a barrel on WTI. Ryan Dietrich is chief market strategist at the Carson Group. And right here on Bloomberg Business Week, he told us he is impressed with this week's rally, given all the other headlines.
You know, if you would have told me that stocks are having their best week since June with the disaster that we've seen with crypto this week, I don't know if I would have believed you. But that's what's happening, right? That's telling us the risk assets, specifically equities, are doing well, and they're shaking off this extreme negativity in crypto. And that's, I think, is one more positive sign for investors to think that the lows indeed like they're in for equities.
Stock bears have made a mint betting against Cathie Wood this year. Yesterday, they gave a chunk of that money back. Traders short selling the funds of ARK Investment Management, Wood's firm, saw about $180 million wiped off the value of their positions as the firm's entire lineup of funds rallied. That according to technology and data analytics firm S3 Partners. Today, the ARK Innovation ETF was up another 8.3%. Blue Apron shares plunged today after the ailing meal kit delivery platform said it may offer up to $30 million in new shares. Today, Blue Apron plunged by 32%. Recapping a big week for the U.S. stock market as we head into the weekend today, the S&P advanced 36 points, up 0.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. It was a busy week, a record-breaking week for the art world. Let's talk about that with James Tarmy. He is arts columnist for Bloomberg Business Week. He joins us on the phone from New York City. James, it's great to have you with me here. Walk me through what happened over the course of 2.5 hours at Christie's auction house on Wednesday night.
Well, in a sense, it was crazy. In another respect, it was actually sort of expected. The sale was 60 works of art. It carried a pre-sale estimate of $1 billion to $1.38 billion. That's just a vast amount of money for any artworks anywhere.
In this economy, too.
I mean, even in the best of economies, right, you're still talking about people spending over $100 million for multiple artworks. And as they say in the art world, it takes two people to actually sell an artwork at auction because you need one person who's bidding against another person to push it up. If you only have one person, that artwork's not going to sell for very much. They managed to stack the deck a little bit with this.
Okay.
They did what's called a third-party guarantee, which means that they effectively sold around half of the artworks in advance, right? If the artworks kind of went above what they had sold it for in this guarantee, then the person who guaranteed it didn't get the work, but they got a percentage of the upside. So in a sense, everyone sort of wins. In other words, the stakes weren't so high because we knew that it was going to do well. We just didn't know it was going to do this well. with fees, it totaled $1.5 billion. 5 artworks sold for more than $100 million a piece.
Wow.
20 separate artist records were set just in this one night. It was, when I say historic, I really mean historic, because nothing like this has ever happened before. It became the single most valuable single owner sale in history.
And the single owner was the late Microsoft co-founder Paul Allen. Safe to say he's a prolific art collector? I actually didn't know he had such a substantial collection.
He did. You know, he didn't have much of a through line between the things that he collected, aside from wanting to buy the very best. So he paid top dollar for these things. It's not like a story where he was buying things in the 70s for pennies and now it's worth an insane amount. Many of these works had actually set auction records when he purchased them at whatever point. That being said, every single thing that he bought, or almost every single thing that he bought, was really at the top, right? And so it seemed, in speaking with auction industry people afterwards, that people who they weren't even expecting to bid decided that it was a sort of now or never situation, and that even if they weren't feeling particularly liquid on Wednesday night, they decided to just pull the trigger and buy whatever they could.
And James, like you said, a lot of records set on Wednesday night. Of course, the deck was stacked a little bit, but tell us about some of the pieces, some of the paintings that were actually sold.
Well, my personal favorite, and also it seems like a lot of other people's personal favorite because it was the most expensive lot in the sale, was this absolutely exquisite pointillist painting by Georges Seurat. And it is not big. I mean, you're really looking at no more than like 1.5 feet wide. It was estimated to sell for $100 million, and 2 very dedicated people bid it up to, I believe, with auction house fees, $149.4 million. Wow. So that was the top lot of the evening. But hot on its heels was a very rare, very important landscape by Paul Cézanne that actually carried the highest estimate of the night going into the sale, $120 million.
Wow.
That ended up selling for, I believe, $137.8 million. So that was number 2. But that's not it. You know, there was...
Well, we only have 10 seconds, James.
Well, a lot of other things managed to clear so much money that it just boggles the mind. Let's leave it there.
All right, we'll leave it there for now. James Tarmy, he is arts columnist for Bloomberg Businessweek, joining us on the phone from New York City, talking about a record-breaking night at Christie's. Much more coming up. This is Bloomberg Radio. All right, let's get over and get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hi, Nancy.
Thanks, Katie. Nevada and Arizona are still waiting on final election results. Nevada's U.S. Senate race between Republican Adam Laxalt and Democrat incumbent Catherine Cortez Masto is very close, as well as the governor's race between incumbent Democrat Steve Sisolak and Republican Joe Lombardo. In Arizona, Democrat Katie Hobbs is leading the race for governor against Republican Carrie Lake with more votes to count. Samara Klar, a professor of political science at the University of Arizona, tells Bloomberg in the Senate race there, Democratic incumbent Mark Kelly appears to have the edge over Republican Blake Masters.
He is leading by about 200,000 votes or something like that. He's got a fairly sizable lead over Blake Masters. So it looks as though that race could be called unless Maricopa County goes surprisingly more in favor of the Republicans than people are expecting.
Again, Professor Samara Klar. In the Georgia Senate race, a runoff is set for December 6th between Democrat Raphael Warnock and Republican candidate Herschel Walker. Walker is back on the stump, urging supporters to back him in December.
He's thinking he's going to win. We need to prove him wrong and let him get out of that office. He don't deserve to be in that office representing Georgia.
Walker's on a bus tour of the state. Warnock says he needs voters to do what they've done before and turn out and vote. The Democratic Senatorial Campaign Committee is putting $7 million into field organizing in support of Warnock. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right. Thank you so much, Nancy Lyons. Well, the Bloomberg Business Week weekend show this week features a deep dive into the special holiday-themed edition of Bloomberg Pursuits. There's something for everyone on this list. Some you can eat, some you can smell, some you can wear. In this excerpt from the show, Carol Massar asked Bloomberg Pursuits editor Chris Rausser and Business Week contributor Christine Shirley about some of the shinier things available this year.
Well, I got to say, I even love just the cover, gifts to suit the mood, but it's a range, right? It's an array of types of gifts and a range of price points. I mean, $15 to $4,800. And I know there's a lot of things that are a lot pricier there, but you guys really do cover the gamut. The categories, let's go through it. Animal instincts, can we start there with the first one that is in the section? I mean, some really crazy, crazy gorgeous jewelry, Kristen.
Yeah, Chris and I decided that having an all-animal jewelry page would make a really strong statement. Jewelers can really go wild with craftsmanship using different techniques. You see here an enamel bracelet from David Webb, an enamel watch from Bulgari, and then also, fully gem-set pieces from Chopard and Cartier. So it was really fun to mine different houses to find pieces that were emblematic of their brands, but also came together in a cohesive way.
Chris, I have to say,
we have
go ahead.
On this page, we have a snake, we have a zebra, we have a panther, we have a leopard, we have a fox. And, the Bulgari snake bracelet bracelet watch I saw almost a year ago, and I said, we have to put this in the gift guide. It's so cool. It's this black enamel, rose gold watch that wraps around your wrist twice, and the mouth of the snake opens, and there's a little automatic watch inside. And that's unusual. Usually, like for a jewelry watch, you have a quartz watch, but this is like a real mechanical movement in there. Yeah, it's very cool.
All right, that was Bloomberg Pursuits editor Chris Rausser and Business Week contributor Kristen Shirley with Carol Massar. You can hear more from that interview on the Business Week weekend show tomorrow at 8 a.m. Wall Street time on Bloomberg Radio and on our podcast feed at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Wall Street wraps up a big week on the week. NASDAQ was up 8.1%. The Dow this week up 4.1%. S&P this week up by 5.9%. An up Friday as well. Stocks closed very close to session highs. S&P was up 36, ending the week, heading into the weekend at 39.92, up by 0.9%. Dow Industrials up 32. That's a gain of 0.1%. NASDAQ up 209, higher by 1.9%. Stocks extended a rally that was sparked by yesterday's report showing a slowdown in inflation. Spot gold up $15 the ounce to $17.71, up 0.9%. West Texas Intermediate crude today up by 2.8%, $88.93 a barrel. So an up day, the Dow, the S&P, NASDAQ all finishing in the green. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much for that update, Charlie Pellet. Well, let's now bring in Mary Ellen Eskandarian. She is the President and Chief Executive Officer of the World's Women Banking. She joins us on this phone from New York City. So World's Women Banking, it's a global nonprofit. It's all about empowering low-income women around the world. And Mary Ellen, as I understand it, in the past few months, you've been doing a lot of work specifically with Ukrainian women. I would love to hear a little bit about it to start.
Thanks so much, Katie. I'm really delighted to be able to talk about really fascinating research. You know, when the war began in February, everyone, we were just devastated to see what was happening. But we kind of quickly put on our sort of research hats and saw this situation emerging. You know, 90% of the now 10 million Ukrainians who've left the country are women. The men were precluded from leaving. Men under the age of 60 were precluded from leaving. And so you had this situation where women were fleeing. This was a population that, you know, 80% of Ukrainian women had bank accounts. They had cell phones. They were a fairly highly educated group. And so we wondered, you know, what could we learn from this group of people, this group of women, that might tell us, is there something that financial institutions, financial service providers, financial regulators could do to ease their experience or you know, learn from that experience? We found that after talking to over 800 women, that they all emptied their bank accounts. So everything we know about digital financial services and the dangers of carrying a lot of cash, unfortunately, really came true for a lot of them. They felt that they faced, you know, real problems in terms of being robbed, even once crossing the border, being taken into homes as shelters. That they lost their cash, so you know their feeling about, you know, being able to access that money digitally, you know, was really. They have lost, pretty much everybody that we talked to have lost whatever in Ukraine, and were, you know, desperately looking for jobs. You know, had kids and even older parents with them. And so this was really where we saw a huge regulatory benefit. The European Central Bank allowed banks throughout Europe in the destination to
lower. Mary Ellen, I think that the audio is cutting out a little bit. We're going to work on that and hopefully get that fixed, because, I mean, what Mary Ellen is talking about is really fascinating. In a refugee situation, fleeing Ukraine, I mean, these women, refugees in general, what do you do if you have a bank account in Ukraine? It makes sense, the human urge there to just get cash, get that money out of the bank account, bring it with you to wherever you're fleeing. But I mean, Mary Ellen makes a really important point that it's not actually a great option. I mean, if you think about the crime risks that come along with that, it sort of makes you a moving target. But Mary Ellen, hopefully we have you back now, hopefully in a better spot with a little better reception. For the women that you talked to, those who weren't able maybe to withdraw those funds from their bank account, I mean, what situation are they left with? Are they able to get in contact with their Ukrainian banks now, or is it just a have to wait situation?
Well, those that sort of did trust the banks, that did, actually were able to get their money out digitally. So the system worked. There just wasn't that much trust in it that it would work. They, as I said, they educated. Most of them had good language skills and have been able to get jobs. And that was why the regulator, the European Central Bank, getting European banks to allow these women to open bank accounts with lowered KYC, know your customer requirements, was a huge boon. So they could get jobs, get money deposited in their local banks. We had a number of women tell these really heartbreaking stories of being in shelters with Syrian refugee families who'd been there, 5-7 years, who were not in anywhere near that situation, who had not been permitted to get jobs or to open bank accounts. And so it really brought home for us the importance of, digital. You can prove who you are as a refugee.
Okay, the audio is a little fuzzy here, Mary Ellen. I hope we can keep you because you make a really interesting point on the reduction of those KYC requirements. I mean, that makes sense to me, trying to help these women, trying to help these refugees. But unfortunately, I think that the audio is just a little too fuzzy here, Mary Ellen Eskandari, and hopefully we can have you back to the show very soon. She is President and Chief Executive Officer of the Women's World Banking Group. She had joined us on the phone from New York City. Charlie Pellet, I believe you're back with me. How are you doing? It's been a busy week when you think about all the news, all the market movements. I'm tired.
Indeed. I mean, there were so many major events. We had the jobs. It was just a week ago today that we had the jobs report. Between them, we've got the election. We had a recent FOMC decision. And, of course, also, too, yesterday, the CPI report. And then all sorts of other things going on, complicating the overall market, market environment, FTX among them. So let me give you a quick market recap of what's going on. Let me begin with crypto because clearly that is an ongoing major story. Right now we have got Bitcoin down now by 5.8%, 16,771. Dow Industrials finished the day higher today, up by 32 points, up by 0.1%. S&P up 36, a gain there of 0.9%. Nasdaq Composite Index up 209, higher by 1.9%. And spot gold today up 14, gain there of 0.8%, 1770 the ounce. And West Texas Intermediate crude up 2.8% today, 88.89 a barrel on WTI. Katie Greifeld, you guys were just talking to Ryan Dietrich on the program. One of the points he was making is that given all of the gains that we have seen for stocks today and yesterday, should we be surprised by those gains given the implosion that we have seen for crypto in general, FTX in specific? Your thoughts?
Oh my gosh. It is interesting to watch the decoupling here because for so long, equities and crypto, they were the same trade. So finally, we are seeing that break apart. I remember a few months ago, crypto advocates were telling me this will be bullish when we finally get the decoupling, but it didn't quite happen the way that maybe some of the bulls had hoped.
Indeed. And let me just bring you one quick headline from the Bloomberg Professional Service. We've been talking a lot on this program and others here at Bloomberg about all of the big tech companies that have been cutting jobs. The Walt Disney Company now planning targeted hiring freeze and job cuts. That word coming from CNBC. So now the Walt Disney Company joining other big companies in targeting at least a hiring freeze and possible job cuts. Again, that headline right now on the Bloomberg Professional Service from CNBC. I'm Charlie Pellet. Katie Greifeld, back to you now here in New York.
Charlie Pellet, thank you so much. Interesting to get that news out of Disney. This is financial conditions tightening. This is the long and variable lag of Fed policy working. But in any case, I'm going to leave it here. This has been Bloomberg Business Week on Bloomberg Radio. Tim and Carol will be back next week, but I'm Katie Greifeld. Thanks for listening.